Now, this is important because there's another factor here. It's not just about the Mexican economy, it's also about the currency. Because what did we see the market reaction in currencies around the world against the dollar is they plunge. The threat of tariffs causes currencies to drop. Now, the problem is, as an economy slows down, what do central bankers want to do? They want to cut rates. And what is a market response to a central bank cutting rate? Drive the currency lower. Now, what does that do on a domestic level? It leads to inflation. All of a sudden, if you get a resurgence in inflation, what does that mean for central banks? Well, it means they can't cut rates. And sure enough, you start to look at why Mexico was going to back down and get in compliance and as fast as they can, because at the announcement of the tariffs, what happened? The peso plunged in value. Today, once they realized that there's a potential answer and the tariffs would be on hold for a month to see what Mexico can do to reinforce the northern border, well, all of a sudden the peso surged in value. This is going to be an issue that's going to face Canada as well, because if you talk about what's going on in the Mexican economy, well, we're going to see this all over the world, because if you see consumer prices rising, we're going to look at some U.S. data here. The CPI shown in blue on a year-over-year rate of change against continued unemployment claims, that in red. Now, if you get a shock in tariffs, what's going to happen is businesses are going to be forced to lay off as demand drops. And what you would expect to see is continued unemployment claims rise. But if you get inflation due to a weaker currency, as we see here in the consumer price index, what follows is a recession that we saw here in the US in the 1990s. Let's move forward to the dot-com bubble. We saw again rising inflation against rising continued unemployment claims. This, my friends, is called stagflation. It leads to recessions. Now, what happens after that is you get a massive decline in inflation, but it's the effect of it, and it sends economies into a place they don't want to be. Again, Mexican government had no choice here but to reinforce the northern border, because they knew these tariffs would plunge them right into a recession, just like the U.S. saw going into the global financial crisis, and is risking that right now. We see inflation, while it's trending down, is still running too hot, but we're going to talk about the massive risks that U.S. consumers are worrying about, because it has everything to do with inflation, and yet almost at the same time, nothing to do with tariffs.